First, you look at their experience and specialties. Experience meaning it might be years of experience. It might be whether they're in a public accounting firm or came from a private industry. The number of years experience sometimes matters. If you want someone that has some complexity experience and you have to go back in several years, you might want someone with a little more experience in that regard. With regard to specialties, things like if you have a particular industry that you're an expert in, for me, it might be divorce or financial services or things like that. Whereas I'm not a specialist in restaurants, for instance. And if you need that, you want to look for a CPA that has that type of experience. The second one, and this is probably the most important one, at least to me, and that is communication and responsiveness. Communication is obviously very important. It's actually the number one reason they say they're leaving their current CPA and coming to find another one. It's that responsiveness that is critical. And I think we all look for that, whether we're hiring an attorney or whether we're hiring anyone. We look for that good communication and responsiveness. So, if you see that initially when you're communicating with a CPA, that's typically a good sign that they're going to do that throughout the relationship. And then finally, are they a CPA, meaning are they licensed with the state or are they an unlicensed accountant? A couple differences there. A CPA is credentialed, meaning they actually have a license issued by the state, which means there's a regulatory authority, whereas an unlicensed accountant, there really is no authority governing those individuals. So those are just a couple of things to think about as you're choosing your CPA. Number one, it's going to be your accounting software. No matter what you're using, QuickBooks Online, for instance, is a good accounting software you can use for small business or even individual usage you can use it for. It does a lot of the things that you need to do for accounting purposes and tracking purposes so that when you go to do your tax return, it's all in one place. You can generate the reports and it's all there available for you. You can also use it to link to your bank accounts and able to extract the data directly, which is helpful. You also want to maintain contemporaneous records. What does that mean? Well, contemporaneous records means you want to keep them current as you get them. For instance, if you make a charitable contribution and you want to keep that record for your tax purposes, you have to get that by the time of filing the tax return. In other words, you can't put a charitable contribution on your return. The return gets audited 3 to 4 years from now. You don't have the documentation, and then you go to get it during the audit process, they're going to disallow that because the documentation has to be contemporaneous. So that's one thing, you just want to keep those documents. And by the way, the other thing is QuickBooks Online and some other software, you can actually PDF the receipt or PDF the invoice right to the software. So it's always there in one place. You don't have to keep box of records anymore. And finally, you want to retain records we generally recommend 7 years, at least 3 is a minimum. 7 years for most. Any permanent files we recommend keeping permanent. And what I mean by that is like closing statement on homes, things like that. Wills, obviously you want to keep that stuff forever. Tax records, though, generally we like a 7 years for that. First and foremost, it's income. If you generally make over $1 million, you're at a much higher risk of audit than someone who makes less than that. The percentages are actually pretty low for someone who makes under that. If you make over that, the percentages start to creep up. So that's one thing that can generate an audit. Nothing you can do about that other than just sort of be aware of it. Larger than normal deductions would be another one. For instance, if your percent of charitable deductions as a percentage of your income is quote unquote much higher than the average taxpayer, that could be an audit trigger. Now, an audit shouldn't necessarily scare you. It just means that, they were going to want verification that these are in fact legitimate deductions. And that's okay. As long as you keep proper records, it should be easy enough to maintain. But that can trigger additional audit. So expenses or deductions that are larger than your normal deductions in those cases. And also if you're self-employed. So if you file a Schedule C, for instance, which is for self-employed individuals, you generally carry a little bit higher audit risk than if you don't. And those people with Schedule Cs who have expenses, whether it be office expense, computer expense, miscellaneous expense, sometimes they're going to drill down into those. So it just goes back to when you are self-employed, you want to keep really good business records. And that's why I recommend like QuickBooks Online or a product similar to that, so that you can keep this stuff current and contemporaneous. And that way you don't have to wait till the end of the year, put together these Excel files or other documents so that you have to go scrambling in a few years if you get an audit. This way it's all in one place and tracked for you. First and foremost is the extenders bill. This is one of my favorite topics. In 2017, Congress passed the Tax Cuts and Jobs Act, which was pushed by President Trump at the time. That was a 10-year bill, which means most of that expires at the end of 2025. With Republicans having Congress and the White House, there's a strong likelihood of getting much of those extenders extended, which means for individuals and small business, these are extremely favorable tax benefits, both on the credit side, the deduction side, the income side, all across the board. Really, everyone is going to win from getting that extended. So that's likely to happen in sometime in the second quarter of 2025, or at least into the third quarter. We'll see what happens on that. Secondly, as you may know from the campaign trail, President Trump talked a lot about no tax on tips, no tax on Social Security. That really is a real thing. So Congress is talking about that. The president keeps talking about that. That is going to be something that they're going to be talking about as they push through this extender bill. One thing to note, because they don't have 60 members in the Senate, the Republicans don't, it's probably going to be under what's called the Budget Reconciliation Act, which means it's likely going to be another 10-year bill. But the Social Security and tips is a real thing, so that, we're going to continue to watch that and keep you posted there. And then finally, the estate and gift tax. Again, that is currently $13 million per person for an estate tax exemption. It is currently set to drop to about $5 million if Congress and the White House do nothing per person. That, again, that's a big one on their agenda to get that extended as well and keep that exemption higher. So again, also good for taxpayers.